Good afternoon, traders, and welcome to the Blue Line Metals Edge here for Monday, August 29th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. If you're watching this on YouTube, be sure to like and subscribe to our videos. You'll get a notification when a new video is uploaded to YouTube. Also, if you need additional information, go to www.bluelinefutures.com and sign up for a free 2-week trial of our research. You can select any one of the reports below. We put out a lot of great content. So getting in the markets here today, we had a continuation of the sell-off that we saw on Friday where the Dow Jones was down about 1,100 points. Jerome Powell's commentary was extremely hawkish. There was no time for Q&A, so he wasn't able to backtrack on any of his statements, wasn't able to come out and say, well, get the question, hey, if the economy continues to decline, will you pause on rates? And he would most likely say that we would take it into concern. They'd look at it as a dovish pivot. Market would rally from there. So if you don't get the commentary from him or other Fed officials, market's probably going to work its easiest way, which is lower. So any significant rally, I think you want to sell on the U.S. equities. Now, one thing we did notice was that 50-day moving average comes in right at 4,006 on the S&P. That was the dead low. If you look at, if you modify this moving average and you bring it up to the 200-day moving average, you'll basically be right at that top here. So we put in 200, and look, it's right there at that top. So going back down 50, we're right at that low. So we're trapped between those two places right now at the moment. If we could get on a closing basis below 4,000, get some downward momentum, you're probably going to see this run down 3,700 down to 3,500. So we get that close below 50-day. Watch out, floodgates can open. You got stochastics rolling over to oversold territory, but they're not there yet. So it's not confirming that we're in a full-fledged bear market. Although if you do get our research, you'll notice that in the Morning Express, there was a special report put out last night, which indicated that our stance is going to neutral to bearish on the S&P. It's also going neutral to bearish on the gold market as well as silver. And the problem with those markets at the moment here is that they are continuing to see very high inverse correlation data specifically to the U.S. dollar index. So you scroll down on this report that I send out on a daily basis, you can see the dollar index. That reached the highest level since 2002 today. You also had two-year yield spike to the highest level since 2007. We know what happened after that. We had the big crash on the reset. I don't think we're going to have that in the housing market, but we will have some correction on housing, which we're already starting to see right now. Getting into the Fed Watch tool, going from Friday, 58% to 41% as far as the 75 basis point rate hike versus the 50 basis point. Now that's 75. It's gaining a little bit more momentum. So we track that every single day. Another tool, if you're trading oil, look at the CME's OPEC watch tool, whether they're going to increase or decrease production. Then look in here, we do have, we're right here. We're in a shallow kind of a quad one type setup, low growth, low inflation. The inflation aspect is decelerating. We did see that from that July CPE data. However, if you look at Jerome Powell, he said that one data point is not going to change the Fed's hawkish stance, and that's what really accelerated that blow lower. Now, we think we go into deflation into the fourth quarter, so you're going to want to have kind of that set up in your portfolio. That's why many of you, we bought some December put spreads on the S&P 500. They were the 4,100, 3850s. We did use micros for many of those. And then looking at some of the other things, scroll back up to the top here, get in. If you're not using the ranges and the refresh ranges, I noticed the ranges work really well in the overnight session unless you get your volatility type event or you get your opening like what we saw last night, then you want to default to the refresh ranges. Also, if you're going to trade within those trends that we've got set up, you're going to use these reversal points here. So like shorting gold on 1760, targeting 1740, or using 1740 as your buyback point. You're going to want to trade with the trend of these markets, and you'll notice that the trends do change because the markets change. So, we don't always get this straight up one directional bull market that goes on forever. Looking at the gold market. So this was the point where we looked at some longs on a breakout. It was above 1800, looked really good. Kind of corresponded with a bottom. The dollar index started selling off and things like that. But when the market failed and we couldn't get back above the 50-day moving average, this was your next major level of support, 1740 right in there. We did break through it here earlier today, but now we're trading within this resistance zone. If it's a bit of support and resistance. So if you do get that flush down, be aware that gold prices could probably move down to 1685. Our system here is short. The suggested buy stop's 1804. It sold it at 1748. Market settled right there. Market's there right about right now. If you're going to be a little bit more active, you want to trade within the day, use that 1782.20. You could see that managed money had liquidated some of their long positions last week, and then getting down into the silver. That chart looks much worse. So it's back near these lows here, these recent lows. It gave you a bit of false hope, and that was mainly because of the copper market. Copper and silver tend to have a pretty strong positive correlation. So when we saw copper prices reverse off of that, that's when silver got massively liquidated. So we did make that kind of head and shoulder pattern here, although this one should have been a little bit higher. Small pattern right here, but nothing, nothing out of the ordinary. And you can see that the bear market is widening against the bull market. So you got to decide, are you going to defend the long positions, or are you going to lighten up on any kind of strength? So the system is short at the market. The buy trigger, the support 2034, that's going to be way up here, but that's a bit too high. I'd say use that 1983 as your next resistance point for risk management. Market short at 1998. It's positive on it. I'm using the 1,000 contract because that's what most of our clients are trading with. Even if they do have 10 or 15,000, they're scaling in, scaling out at the market. Looking at managed money, it is not short on silver, which is not unreasonable given where things are at. And of course, gold performing better than silver. You've got the gold-silver ratio right back at 94. So I could blow this out farther. The worst it got during the most recent times was about 120. We get to those levels. Silver is going to be looking at a really good long-term buy. Going into the copper market, we failed. That was the 44 billion they threw into China with stimulus, and this was kind of that 1,000-point sell-off. And well, actually, it was a 1,000-point sell-off that took it down here, and then this is the continuation. So you want to play against these. If you do have shorts on with us, down on the probable range, it came in right at. So if you look at a newer one on copper, it's going to be like 351 is going to be your critical level of support. So we come back down, here's 355, 340s. It's going to be somewhere in this range. Like 351 will probably be covering some of those shorts. You'll see stochastics dip down a lot more. You'll see this DMI minus crossover plus, and I think that that'd be a good spot to lift your leg, and then if it breaks down or you get any more strength, sell on that market. Looking at some other things, crowding analysis, I was really surprised they really kept adding to those longs, but it had to be that Chinese stimulus data that got them long. Technical setup on platinum, I don't like the way that it broke right here. So we're lifting a lot of platinum longs on any kind of strength. You're going to need to see a much more constructive setup. We thought that this big run up right here, we would have had it bounce somewhere in this range on a typical pullback or another pullback, but it sliced through the 50 days. So we could see that platinum is not doing as well as what we thought. So we're going to want to lift those positions. Remember, don't be right. Just try and make money on these markets and try and keep your losses to a minimum. If the losses are big on one contract, consider the smaller contract and smaller contract size. The only problem with something like platinum is it's $50 an ounce. It tends to move $30 in a day. So it's short right now. The buy trigger, 937, that puts it up here. That corresponds with the silver market. That's going to be too high to risk up to. You're going to want to really use this 887 if you're short, risking no more than that. So you can see they liquidated that platinum, and it was most likely with the silver market. And then pretty much one of these really stood out. One, that gold is negative on the year. Silver's way negative on the year. Same thing with copper and platinum. All look terrible on the year. Same thing with the euro, and it's this 17.5% that the dollar's up is really what's weighing in on it. You can see the correlation matrix. You can see the dollar, it's got a 79% inverse correlation. At least that's what it looks like here. I might have to blow these up a little bit bigger. This was the standout. Day over day volume on gold, you could see that people just jumped, in and out of gold. and in comparison to the last 5 days, that there's just a big uptick. So I think people initially went into it. What they do is when you get a 1,000 point sell-off, they park their money in the gold and they call timeout. They wait for some safety, wait to figure things out, and then they go back chasing their markets and things like that again. So after that big sell-off, a lot of volatility in U.S. equities today. So if you have any questions, you want to get one of these reports, or you want to chat, give us a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.